there are a lot of people who would like to have interest every year, and this is not that kind of portfolio. And we will know why. So before I will start the whole presentation, the whole idea is to tell you what I'm going to tell you. And I'm going to tell you about some companies and how do we see the portfolio doing well from here in the next 1 year. That's one. Second, we would like to answer a lot of questions which have been asked to us in the last year. Many of you have not asked any questions. It is good and bad both. But there are some investors who have asked very good questions, very curious questions, and I think we all should learn from them. On your table, there is a annual report for founders portfolio. Whatever we have learned, I know I cannot write everything because if I would have written everything, it would have been more than 100 pages. This is a gist of what we have done last year and the learnings and mistakes and achievements. So it's a must go to document. It will increase your confidence in us and it will also help you to make money. Now before I start, let's start with a very small video of Amazon Astro. In the meantime, we'll have one or two more guests come in. Then I'll introduce you to my board members and my colleague. And from there, I will take the macro picture of the whole economy and the stock market for 2022. Then we'll talk about the micro picture of the companies, each one by one. They wanted something from Stitch Fix. Would like to also share with you that we would like to be very, very transparent with you. The corporate governance and ethics is the highest on the card. My journey also, I would like to tell you, I started roughly in 2008 as a banker. Many of you have met me through Ragtime, and that's how we know each other. And I think still half of the room is filled with those people who know me from Ragtime days. From there, we became an advisor. I left Ragtime in 2015 to start this company called Client First Management Consultancy and Client First Group. Then we ventured into India called Client First Wealth Management. We sold a lot of third-party investments. A lot of you are invested in those products and have made money. There are some investments which have actually doubled your money in 1.5 years or 2 years. What we have learned during the whole process that equity is the investment we would like to be. Just request to all of you to switch off the mobile or keep it silent because today I have not kept any lamp lighting or something. I would like you to actually go with the companies because it is very important that you don't invest with us blindly. We don't want even a single penny of yours if you don't think we are worth for $5 million of yours. Because we are here to make you 10 times of your money in next 10 to 13 years. And that's the only agenda. 5 o'clock in the morning when I wake up, the only agenda I have is how I maximize the profit. Because we have a share on your wallet. If you make money, we make money. That's very simple. And that's why people who went Gulf Food today, I told them, please come here because I am also making money for you. And Gulf Food is a business for you, this is same for you. And the meetings can be here and there. And they have actually come, but two gentlemen have come all the way from Expo. So give a big round of applause for Mr. Anand. They come all the way from Expo. And they're going to go back to the Coldplay. Today, one of the bands playing. It's a lifetime opportunity at 9 o'clock. So, okay, I think we should start with Amazon Astro. It's a portfolio company.
A robot? Yes. What are we going to do with a robot? Well, Astro, follow me.
Hi, Grandma. I miss you.
I miss you too. Hey, you got the toy I sent.
Yeah, I love it. Astro, follow me.
Cool. All right, race you.
Come on.
Hello, Dad, turned it off.
And now I totally believe you. Yikes.
Message from Steve. Remember to eat something green today, Dad.
Check.
Hey, Mark. Guess we turned it off.
very well explained. It is self-explanatory. How many of you have Alexa at your home? Wow, so we don't have many people. But I can promise you that Astro will get you. So I live in a community called Executive Towers, and people have a lot of pet over there. And you know, pet the rich man's business, and 27,000 dirham is a normal cost for a pet. We also want to have a pet, but we have seen in the past it's not easy. You need 2-3 servants to take care of the pet. But this is a better idea. So I can tell you that this is going to be a billion-dollar idea which Amazon is working at. We all own Amazon. We're going to increase the stake in Amazon, and this business is absolutely brilliant. Few days ago, Amazon increased the price of Prime membership in the US, and that's called pricing power. That's called moat, which we have actually explained to you. All I'm trying to tell you is that the kind of things happening on the street or on the earth is absolutely extraordinary. And if you are partner of them, rest assured they're not your competitor, and you're going to make a lot of money. Now, before we go to the presentation, I would like to introduce you to the board members of our company. So, Mr. Dr. Anil, please. Dr. Anil is an NLP practitioner. He is a doctor by profession, and he also helps us, our employees and us, they train them to make sure that they have a proper goal. Because it's very important that companies should have a common goal, and he is helping us with those learning and development pieces. Brilliant man to meet. He has practiced, I think, for 20 years now. 21, and he's also one of the BNI chapter president. So please meet him after the session and get to know him. Mr. Aswamani, who is British citizen. He is with us for last 1 year now, and he's also a member of Hare Krishna Islam Group. He runs his mobile business from the Gaza, and he also have a call center in the UK. So he has been a great addition. You should meet him as well. He is, I think, opening a restaurant also soon. So that's his introduction. We have latest addition, which you will hear more about in 2022. Amrit Pal Singh. Amrit, please. Amrit is joining us as the Chief Belief Officer. He is another fund manager who does not believe in the stocks. He believes in the option writing. He works with an insurance company. He has successfully handled London Dairy. And if you have gone to DIFC, the Shakespeare Road, there's a London Dairy Bistro. That's his baby. He has worked with IFCO, and I think when you will meet him, he will explain it to you. He is somebody who speaks faster than me, and it's a brilliant match for both of us. And that's how he has joined us. You have Varsha, my wife, and who's been in the company now. Gulshan Rani, who's been the first employee of the company, elevated to partner. I would like to also mention special thanks to Mr. Pramod Chaudhary. He is with us for last, I think it was 9 to 21. He has been always supportive. He has never asked a question. He just asked me how much amount. And believe me, he has been benefited because I have done mistakes, no doubt about it. But one thing he has put in me is the moral responsibility. And that is the lesson which I have learned from him. When he signs blindly, I get scared because it's all on me now. And that's how this relationship has fulfilled. One fine day, when I wanted to raise money for my company, I just wanted to tell this as well. And I said that I need some money to raise because that time was a startup thing and all. So let's raise money and take it to the next level. And I went to him, and all he said that the money which is there in the account is yours, and I don't need anything. He did not ask for any partnership, no letters, no check. He said, when you are done, give it to me. Who does it? And that's the day I got a lot of confidence. A big round of applause for him. As a gentleman, why I'm taking their name? Because it's a 10-year plus journey, and you must know these people because they don't give referrals, by the way. And when I tell people, if you call them and they say, no, don't invest with me. Because at the end of the day, I want to make sure you don't get into the same mistakes what people have done with, let's say, real estate fund in India. They have done with the property in Dubai. They have done with private banks in leverages. So I want to make sure that when I onboard you, there is not an iota of doubt in your mind that, okay, let's see dekhte. That is the attitude I don't want. I want to make sure that you take 3 months, you take 1 year, that's absolutely fine. But you should know that there are people who are with us for 10 years plus and made money. The second gentleman sitting here, he himself is an investment banker and he's a very young guy, but one of the biggest relationship we have, Mr. Talwar. is sitting just on the second table. Anirudh is also somebody who has always said yes to what we have told him. He asks questions, but he's a progressive person. What I've learned from him, he'll ask you a question. He believes in making money. He believes in making money. He himself is an investment banker. He has analyzed many businesses in Saudi. He was with Moelis & Sons. Now he's with BP World, and he shares his knowledge with me without any gain, any personal gain. And I will just request all of you. He's also with me for 10 years. Big round of applause. This was not easy to call them, by the way. They don't like to come. There are many others who don't like to come, and they have been with us for last 10 years. That is what I want to tell you. Now, after the introduction of all the team members, let's go to the portfolio dive, deep dive. This will happen every year. Why I'm doing it? Because everyone I meet and I have to explain the same thing. It is better that we record it. We do it face to face. And even I think now COVID is kind of subsiding. We would like to do it every year. Last year also we did, but it was online. The whole idea I'm doing is that to tell you that this year how the portfolio is going to do. I might go wrong in my observation, but what we see, would like to tell you. And if you don't see it, don't give us more. But if you see it, you know what you should do. So macro picture is very clear that the market is bullish. Now, why market is bullish? I'll give you a so 99% of investing is common sense. I'm sure you are ordering cars and you're ordering a lot of goods, etc. for your business. Are you getting them on time? No. The answer is no. The shipments are delayed, the products are not available. And when you have a supply side crisis, you might not have a market crash. Let me ask you a simple question. When do you think people sell?
All the time.
Yeah.
People want to
So
sell.
when more people sell and less people buy. Very good answer. When more people sell and less people buy, then only you have market crash. It happened in March 2020. People sell when they are fearful. Two things drive the market, fear and greed. Do you agree? So when they are fearful, they sell. Why are they fearful? When the customer cancels the order. When you have oversupply. Are you seeing that situation? Just say yes or no, we can move on. If you are seeing a market crash, please raise your hand. So Goldman Sachs themselves, even JP Morgan, everyone is saying that the index should be at least 6% YTD. I'm saying from here, we believe 9 to 15% is what index should make you. If you look at this allocation also, the second one, the US equity, a lot of analysts are bullish, some of them are neutral, but nobody is negative. Statistically also, in the second year of US election, when the government is stable, you see a third year picture. Market always works in advance. And the third year picture is where you have a midterm election, it is generally calm. So what will happen eventually, the first 6 months will be more volatile. And then in the last quarter, or last 6 months, or last second half of the year, you will start seeing the brighter picture of the next year. And because of that, market will tend to move upside, have an upside. Is this point clear? Any questions so far? So why I told you this is because if macro itself is bleak, if market themselves are going to go down, the chances to outperform the market will be very, very less. Because we have the same market. So the whole idea of tell you that macro picture is looking great, but this will not be a 25% scenario like last year. For the S&P, I'm not discussing the portfolio. Now, macro picture is getting clear. If you still think that this is not going to happen, feel free to talk to me after the session. There's something called leading economic indicator. We also shared with you in a lot of sessions how to read market crash. We're not saying that we know exactly when market will crash. What we are saying is that you can read when the market might crash, and that is very simple. Once you have a oversupply, which is not the case, whether it is chip, whether it is electricity, whether it is goods, whether it is cars, whether it is mobile. So I ordered an Apple iPad, and it is being delivered to me after 28 days. So please understand that macro picture is looking bullish. Instead of trading, even if you hold on a stock, a good stock, or a good stock portfolio mutual fund, the chances are that this year you will make money. Next. I would like to congratulate all of you. I know some of you have only invested in last 3 months, but whoever has invested with us for at least 1.5 years, they are actually gaining 840% on Denos. It is my first, thank you, Anil also, I'm sure you made it. So 840% return is what the first 8 bagger in my public portfolio life. So I just want you to understand how it has happened. I'll tell the story as well. And the next search is for 100 bagger. So hang on. Now we're gonna look at 100 bagger, and 100 bagger with 10% allocation can deliver how much return? Yeah, 10 times. And that is the game we are playing. Now why we will succeed? Because we don't take leverage, we don't short the stock, we don't really unnecessarily complicate our asset allocation. By default, we go for 7 to 10%. This company, I bought and I took a 7% allocation. Thanks to Shilpa for quantitative research. Thanks to Anirudh for the fundamental research of the section of the sector. Because he works with DB World, so it was very simple for me to do the analysis. We analyzed roughly 10 to 15 companies and we found that this is the company we are not going to lose money. I will be lying to you if I'll say I know that it is going to make 8 times returns, but I was damn sure that I'm not going to lose money. And returns and results are in front of you. Look at this picture today. We are YTD positive. Our portfolio. So this is YTD minus 1.48% from January 1st to till date. We are either some of your plus, some of your might be minus 2%. But if you look at the other indices, the other lines, they are between 6 to 8%. I'm not interested to any comparison here. But all I'm trying to say that asset allocation is the most important thing. Now today we are sitting at 20-25% cash, which we are going to redeploy. And we also have 25% gold, which is a counter-cyclical sector, which goes up when the market crashes. So we are in a very good position to beat the indices. Having said that, we are not looking to do it on a yearly basis. But we would like to tell you that we see a significant upside from here on. Now let's discuss the portfolio topic. So let's say you want to benchmark, you want to see the returns. You can do against the MSCI World Index or Vanguard Total Stock Index, but S&P 500 is not a comparison because you don't have companies from it. And I am not doing any comparison game here. I don't want to beat any indices or any person. I'm very happy delivering returns, and it should be doubling in 5 years if we do a good job. We have a full process which I have mentioned in the annual letter. You can go back and read about it, read about the whole process, the mistakes and the learnings. Next slide. So we have a company called Charlottesville Holding where we have done a valuation mistake. In the starting days we bought it. Recently you would have seen that the company is at least up by 30-40% in the last 3 sessions. What is happening, I'll just tell you. So I'm sure you would have heard about the prohibition law. There was in the US, drinks were not allowed in 1990s. And after the World War, the US government wanted the taxation. Government runs on tax collection. And for the taxation purpose, they allowed tobacco and drinking sector to flourish. And the ETF, the tobacco and the drinking ETF, for the last 40 years odd has delivered 13% CAGR return. 13%. It's an addiction business. Like Netflix is an addiction business, I'm sure you agree. Chocolate is an addiction business. Similarly, the liquor and the cannabis and hemp are an addiction business. So now what's happening, you are seeing that the inflation is going up, government is looking to gain money or to earn money, and the best thing is to get these new businesses up and running so then they can tax them. UAE has just announced 9% corporate tax, so I'm sure we all understand this is a very common phenomenon. So what I'm trying to tell you is that Charlottesville Holding is roughly 1 to 2% of your portfolio. If you are seeing the portfolio closely, you know it. And this company, if it does pretty well this year, should be roughly 300% from your. And if it is a 2% in your portfolio and it becomes 300% to just, and still it will be losing money to us. But whatever happened is happened. We are in January 2022. After having 6 companies on your portfolio which are negative, we are positive for the last year. That's how the portfolio works. The game which we are playing is, even if 2 companies become 5 times or 4 times, and if 3 companies become 0, which will not become 0 because we don't buy such companies, but there could be a fraud possibility. That's why we buy 10. That's why we manage public portfolio. That's why we don't buy one company, because we don't know when. One thing which we don't know. So investing is part science and part art. Why part science? Because numbers are there to see. Why part art? Because you don't know Astro will fail or pass. But if Astro does well, Amazon has a great run from there as well. And there are companies also understand, they also have multiple niches. So I don't know how many of you know NASDAQ now going to maintain their data on Amazon cloud. Amazon also came out with something called walkout technology, which is basically you shop and you just walk out. Now till yesterday I was aware that this is going to be on the Amazon stores. But today what I'm understanding is they are going to sell to third party, and they've already done it in the New York, a third party grocery store which actually wants to use Amazon walkout technology. So you have a store in an airport, let's say of size of let's say 4,000 square feet. You enter the store and you just grab what you want and you exit the store. Amazon makes it. What they also have now done is, I'm sure you know the connectivity in the car. Everybody, I'm sure all of you have 70 to 20 model of let's say luxury car, and the map sucks because map doesn't work, and then we use mobile for Google Map. So Alexa is coming in a lot of cars. So Amazon has tied up with these car company called Self, and G, Maserati, a lot of Peugeot, all these brands which comes under it. They're gonna have the Alexa and the cloud capability of Amazon. That's like another income gonna generate from the company. What I'm trying to tell you is that a great company has a multiple source of making money. That is what I'm trying to tell you. Okay, I think yeah. So cloud business of Amazon or Google or Microsoft is a leader. A lot of businesses which have gone in the last 1 to 5 years, including Zomato, etc. They don't have in-house infrastructure. A lot of us have IT infrastructure at our premise. We have servers, etc. These companies don't have it. We don't have it actually. They are born on cloud. Even the banks are now keeping money on the cloud. That cloud business of Amazon, where Amazon is leading the market share, it's with 33%, is growing at 40%. And this is a great business which Amazon has. The second business is Prime. Third is Alexa, and the fourth, just now I told you, could be Astro. That's what the great companies do. So, first company I told you is Charlottesville Holding, and Charlottesville Holding has basically the new CEO joined from Bacardi. Let me simplify for you. Do you know Bhang? Bhang rigs. The problem, which actually we all should be whatever. We don't do marketing. Said we'll not give you anything for free. And what happens is in America, they have a culture of giving you everything for free. Like Domino's Pizza comes in and then they give you a 50% voucher and all. I don't really like this pizza and all, Pizza Hut, but they are one of the biggest businesses in the world and people have made a lot of money. So when I look at Gujarati client and ask him which restaurant do you go, he doesn't tell me any name. But we all have to agree that Pizza Hut, McDonald's, Starbucks, they are the biggest businesses in the world. And if you would have invested in them, you would have made 10 times or 20 times or 30 times on this business. So my point is that Charlottesville Holding should be at 300% to 400% from here. And if that happens, you have a 3 to 5% return coming from Charlottesville. Now earnings of all these businesses which are in the hemp business or CBD business are increasing. The problem is that the legalization is stuck at the Congress level. Democrats are not able to pass that law properly, but there are significant progress which is happening. And that is the reason why the sector is up and Charlotte is up. I want to show you something here. Next slide. So, how many of you are fan of beer? Right? Beer is something what people can't live without. How about a drink which has basically CBD in it? You would like to taste it, right? So CBD drinks, which are the next thing, and let's hear from Nasdaq article itself what kind of opportunity they're talking about. I'm just connecting the link up. So if you look at it, so CBD Beverage Market was valued at $86 million. Please hear me out, very important. In 2018, and they're expected to grow to $1.4 billion by 2023. This is a CAGR growth of 75%. Now I want to show you something else. Recently, the CEO of Charlottesville has changed. Any guesses? So a senior vice president from one public listed company has joined Charlottesville Holding as CEO. The second one. Yeah, so because of cannabis ban here, so it's not easy to open the website. Just tell you, former Bacardi executive has joined Charlotte as a CEO. And when we had an earning call with them, they also wanted to launch something like this, and they wanted to come to India and see how this works actually. They have a CBD gummies, which is one of the top products on the shelf. There are challenges in the company. Every company has challenges. People are saying that Amazon cloud will be taken over by Google. You know about Facebook. They have challenges from TikTok. So that's art. And the first part is science. So you can, I'm not selling you anything, to be very frank with you, because I don't know myself. But I'm optimistic and I'm realistic. If this fits into the revenue, even by 20%, the price will move. And if the price will move, we will gain. So idea tell you that a 2% allocation growing to 300% just because the revenue is growing up, there is enough tailwind because macro is positive and macro is increasing. So one more thing I want to tell you, we buy small fishes in a pond which is growing. Because if I buy a big fish in a small pond, the fish will die. For example, if I would have kept an oil mining company in the portfolio, after some point of time, the ESG would have taken over and we would have lost a lot of money in continental resources. That's the reason we sold continental resources. So a lot of you actually ask us, why don't we sell? We don't sell by every day. We want to make 300, 400% return and then we want to sell. So we do sell. We want to make actually more money. If we just sit down, we can make it 15%. We want to make you more money, but we don't want to commit to that number. Because we will get a kick, right? If we make you more money, we get more share. Why we will not make you money? And 2020 returns, anybody remembers? Anybody who was with us till 20? We delivered 36% net to the client. 36%. So 2.5 years, roughly we have made 80% for our clients. So sit back, if you have just joined us 3 months, 6 months, 9 months back, we are not here for our yearly return, but we will deliver. Because if we will not deliver, will you give us $1 million? You will not. Second company, Puya. Very well researched. My whole team has helped me. We went to 40 companies in China. It was not well planned, by the way, because again I'm saying it's part art. How did we go to China? Because we saw China is crumbling. And we love companies which are actually great, but the market is not giving them good pricing. So we went to China, we shortlisted 40 companies, and our last 4 companies, we spent at least a week, and we decided to buy Puya. And the day we bought the company, we bought at $10. Today your portfolio is at $6. At $10, company had $8 cash. Today, if you let's say you go and buy Puya, if at all they allow you to buy, you will not only get the company, you will also get $2 back because $8 in cash is in the company. So this company is Twitch of China. Now, how do you know Twitch? Okay, I'll explain you. The way Netflix is today streaming the sport, the movies, the static content. What about the dynamic content? And there are 2 types of dynamic content. One is the live, what we are doing right now. We can basically broadcast on YouTube or Twitch. There is also something called esports, where people love to come together and they make team and they play sports. And once they play sports, people love to watch that. It is that kind of a company, and 50-year-old people are not, and like even I consider my dad old, we don't go to that platform. But children understand this company. So Twitch is the US version of Puya, and Puya and Douyu is basically the Chinese version of Twitch. Twitch is bought over by Amazon last year at $1 billion valuation. And now Amazon has gone for a 10 years NFL exclusive rights, and this will be broadcast every Thursday on Twitch. So that kind of business we have bought in China. The valuation was great, and look what happened with us. But if it just come back to $14, which is a very decent, a very conservative valuation from 10 to 14, this is going to give you another 10% of the portfolio or 7% of the portfolio. So till now we got 7 from here and we got 3 from Charlotte. Okay. If you are not convinced, please talk to me. If you have a fact, I would love to buy your story. I am giving you facts. I think all know this company. Before you onboard us, you want to make sure that this company is robust. So let me talk something about the company. Interactive Broker is a 40-year-old company. Thomas Peterfry, who believes in computers, he used to buy options, sell options, and those days calculator and computer was not there. So what used to happen actually, he used to, and they were not allowing him also in the ring. There used to be ring in the olden days. He used to carry his handheld computer and he wanted to punch the pricing of the option, and they were not allowing him. So he used to catch a bus, go home, and then he used to calculate the price, come back, and he used to buy that particular option for a share. Finally, they allowed the PC and the laptop in the ring. He is the first person who wrote the programs for automated trading. This company is today more profitable more than Credit Suisse. This is the fastest growing company. They have less employees, a technology company. Every every millennial has an account with Interactive Broker. Lowest cost. You can buy bonds also. The leverage is also very transparent. I'm sure some of you have private bank account and you have to always struggle with your banker to ask for a leverage rate or decent rate. You might be paying 0.25 or 0.5 to buy a bond. Here you can buy this for $100. That is the kind of platform it is. Very thankful to them, because if they would have not passed on the cost to us, we would have not been able to give you this kind of offering. Having said that, we have nothing to do with this company, because we are brokerage independent. We can practically manage your account with any broker, be it Saxo or be it Julius Baer. Absolutely nothing to do with the broker. But from the investment perspective, from the funds portfolio, yes. So what I want to tell you now which sector this year is looking very bright? Any common sense? Fed is doing tapering, the money is going out of the system, interest rates are looking up. Which sector do you think is going to make money across the world? Good. Banks and finance. A great answer. Please give a big round of applause for Mr. Ravi. Investing is common sense. Bank of America is one of the most recommended stock for this year on the Wall Street. Why? Why? So link it now with why crash will not come. Because once the Fed will take out the money, who will pound the money? Banks. I remember I was sitting with Anilji, and one banker called him and he was offering him credit card 9 days money free. I have never seen that. Generally they charge you at least 200 dirham. He was not charging that also. And he was literally begging him to please take that money, please take that money. And I was like, what is happening? One more thing I will tell you, I just bought a Lexus 1.5 years ago. And I wanted to buy it, so there is a card called Alpha Lexus card. I'm sure you know it. FAB issues it. And then if you swipe that card on a Lexus showroom, there are 18-20 showrooms. You can go to Toyota also. There are a lot of Alpha showrooms. For a lot of other things also. You get 5% discount. On a 200,000 dirham car, you will get 10,000 dirham free the day one. I've actually had some people also swipe the card, but the major problem is they don't give the card to businessmen. They will give it to an employee. So now I'm banya, frugal, what should I do? So I approached Anirudh. I said, if you can help me. Anirudh, being a high salary person, he got the credit card. But again the issue, because there is a limit to the maximum percentage also. I'm sure you all use it for custom and also you know this game. You are actually very senior than me in this game. Custom duty and all, I remember when I used to sell credit cards in the textile market. Then I have to take one more credit card. It was very difficult to go and ask for help. I actually put a fixed deposit to get a credit card, and that's how I got my incentive on this Lexus. It took a month to do all that. But what my point is, 7 days ago, one person approached me from Chartered Bank and said, "Sir, I have a target. Can you please take a credit card from me?" And I was very proudly saying that I'm a businessman. You will not give the credit card. And he said yes. 2 days ago, he came to me saying that Chartered Bank has changed the policy. Now you can get the credit card. What I'm trying to tell you is that the banking sector is going to fill the gap what Fed is going to create. Whether it is UAE, whether it is India, or whether it is US. So I'm sure if you read Gulf News, if you just glance through it, they're saying banking is very solid, very robust in Dubai. If you talk to the Indian fund manager, they're very, very gung-ho about the Indian banking system as well. So Bank of America is a stock which is going to do wonders. Whole finance sector is going to do wonders. We are not going to buy Bank of America. We have already increased the allocation in Interactive Brokers. How many of you know how much allocation is there in Interactive Broker for your portfolio? If you don't see it, then it's a problem for us. If you do see too much, our problem. Any idea? Interactive Broker?
10 plus.
10 plus. So it was 10% at the time we bought it. So we had 5 and then we bought 5 more. It has become 12 plus. Okay. Now look at the valuation gap of Bank of America and Interactive Broker over 1 year, right? 1 year period. Now look at the 10-year picture. So you can actually go to Yahoo Finance and show them. So 10-year valuation picture, you please come here. So 10 years picture is where the valuation gap is very less. And if you see 1 year picture, you will find that the gap is more. That's one trend. Second trend. What happened in 2018? What did Fed do? It actually started reducing the interest rate. Up to 18, it was increasing the interest rate. So he will show you that as well. Just show 5-year picture. Remove that comparison. Oh, that is the interest rate. Remove it. Yeah. So if you see from the 16 to 18, if you see Interactive Broker got doubled. And you can check this with Charles Schwab, which is the biggest broker in the world. Interactive Broker is second. The trend is forward. You can actually go back when the interest rates were increasing from 9 to 11. Again, because this company was not listed then. So one thing which what we see is that, by the way, Interactive Broker's main business is lending. So one is a brokerage and the second is lending, and they lost $1 billion in cash flow when the Fed reduces the interest rate. And this time everyone is increasing the interest rate, and they work in 56 markets. So Brazil is right now 10% interest rate. Because I don't do FD, so I don't know much idea, but Brazil right now is 10%. Every bank, every country is going to increase the interest rates. And Interactive Broker is going to have a windfall of cash flow. And cash flow is all about business and investment. You all are businessmen, so you understand cash flow is so important. So Interactive Broker is another stock from where you should get how much on the portfolio as a contribution. Because it should be doubling from here. Another 10%. So how much you have reached now? 10? 20. You have reached 20%. Last company I'll cover, and then you have your questions, and we can have drinks. We'll open questions as well. I don't want to cover the whole portfolio. I think JD can leave it for a moment. Yeah, Amazon. So I've not covered Amazon, right? I'll cover Amazon. I've not covered how much Amazon will make for you. I've not covered, right? I've just talked about Amazon Astro. I've talked about Amazon earnings. I've talked about prime price going up. Amazon has a share buyback program from 2016. They have not bought shares until the last fall, when many of you thought let's put in more money, and probably did not put in. They put it in their own stock. So between January 2022 to February, they put in the money and they bought their share. The statistics shows whenever they have bought shares, the 1 year return is between 167% to 24%. We are going to buy more of Amazon because we have tons of cash right now lying on our portfolio. And that's how another 7 to 8% is going to come. Rest, all the companies are already 40-50%. Now I can show you one more chart.
What do you have? Amazon, what's the earnings growth? 1 year.
Earning growth is 24%, 24.
Based on what? Cloud?
Yes, cloud.
Based on cloud is the highest margin. Overall is 24%. And cloud is the main driving business across all the FANG stocks. So Facebook is on by the way Amazon cloud. Will you show that Excel sheet 5-year and that? So last thing we're going to show you, we're not covering 4 or 5 companies. They're down on your portfolio. We're not down by TV. This year we look at a bright future. What you have an Excel sheet? Yeah. So we are showing you everything statistically. We are not going deep into the company. But before he does it, before he shows it to you, let me talk about Stitch Fix. And it is there in the annual report. How many of you know we have a Stitch Fix? Many times we have actually predicted. Somebody has also tried averaging it out and lost further money. I have also been blamed that it was at $108. Why I didn't sell it? I agree to my mistake. If there is a company which is extraordinary going high and there is no business sense, I think probably you should sell it. These are the learnings. But even after that, the good thing is that regret is a lifetime decision of an equity investor. You are allowed to do mistakes here because your asset allocation is right. Now, we recently ordered from Stitch Fix from America. Somehow we got the way and 2 more boxes are coming tomorrow. And I want to be very transparent with you. That particular piece of cloth which we ordered, it has got stain in it. But that doesn't make the company bad because it can happen with any of your products. We need to now see how will they handle it. So what we did, Shilpa became an end user and consumer. She went to Amazon Prime, she went to Nordstrom, there's the 3 competitors of the Stitch Fix, and she went to Stitch Fix. And on the last page, we have given you the comparison, and let's go through it. So if you look at the comparative analysis, the number of brands which Stitch Fix has as compared to Amazon Prime Wardrobe are way, way higher. So it's like a software as a service and platform as a service both. So I don't know how many of you know about this business by the way. Please raise your hand if you don't know about the business. Stitch Fix, because I have been telling you again and again, but anyone who does not know, who is it? No? No. So how do you buy clothes? You go to a shop, you choose, let's say you go to Mashima Dutti, you like the shirt, you buy it. You go to Armani, you buy something, you go and you buy something. So that's one way of shopping. But you actually do not have time, you're a busy person. If somebody buys clothes for you, assort it for you, as per your taste, and deliver it to you, and all he asks for you that if you don't like the combination, I will charge you $20. Now knowing many of you, I think your 1 hour, and I really thank you for coming, is more than $1,000. Poor person like me, let's say $100, 1 hour. Okay. Now Stitch Fix delivers a box to you which is called Fix. I don't have it today to show it, it will come tomorrow. So this box will have 5 clothes and you can try them on. And specifically in the COVID, you are at your home, you are relaxed, you can try them on, you can show your outfit to, let's say, your wife or your girlfriend or your friends on Facebook. And then you can decide whether you want to keep it or not. You may choose one, you may choose 2, you may choose the box. I've done that shopping in America when, I think before Corona I was there. Since then, it's completed the portfolio. Recently, we are doing it here, sitting here because we got a way to get the goods here. Now, this kind of shopping is unique. You save a lot of time. The same thing Jeff Bezos has mentioned in his annual letter, last year annual letter, which I have actually mentioned, I recommend to read for all of you. So please read Jeff Bezos' 2020 annual letter. He said that we are delivering value to you. 15 minutes the time what people take to buy on Amazon. And now since I stay far from the city, Amazon buying is the great for me because if I don't like something, you can just return it. I was very shameful that was you order something and then return. No, you don't like it, right? Like it is not my blood. Like you order something from Jockey and you say no, I don't like it, return it. But that kind of confidence Amazon is giving you that you order, you don't like it, no question asked. no shipping charges taken, and you can return the goods. In fact, recently we bought the luxury shoes also from the Sun Sand Sports. So online is the way to go. I'm sure you agree. And we have one more condition. When we buy, we look at a company which is selling online or selling cash. So Stitch Fix is that company solution where it gives you a customized box. It's called Fix. You have a personalized data from your stylist. Basically, you have an affordable fashion designer helping you with what will match with your style. You give a lot of, like in Netflix, you remember Netflix? You give a lot of thumbs up, thumbs down.
Nice.
Okay, I will repeat this example. So recently I watched a movie called Pushpa. Okay, if you have watched it, you will be with me. Pushpa is roughly 9 IMDb rating. And I became a fan of this movie. Brilliant choreography and acting by Arjun Allu. And after 2 days, now I again on the Netflix. And I was on that high. It was very difficult for me to play anything and watch. Because that kind of movie, when I watch movie, I learn a lot from it. And I was not able to actually buy and watch any other movie. So there is a option on Netflix, play me something, which is not there in Amazon Prime. And I click on play me something, and it played Shyam Singh Roy. Now I don't know if you like movie, you'll understand me. And Shyam Singh Roy is the equally 9-star movie, 9 rating movie, 8.3 rated movie. I was not watching it because it is only the restart. And okay, that's old story, again I'll hear it. And believe me, the movie was great. And this function really helped me. So
Sorry to interrupt.
Yeah.
What did you learn from Pushpa?
Okay, I learned, okay, so there is one negative side of Pushpa and one positive side of Pushpa, that leaders. So I basically see from the leader's perspective. A small thing like you learn dancing, you see the deep thought process of the director on the movie, the actor on the movie. Then on the leadership, I'll give you a small thing. So when he was beaten, I think, but it will take the whole thing from other people, but I'll just give you one example. When the first scene, they were beating him, the first thing when they beat him, they stopped him, he said 10,000 rupees. When they beaten him, he said 20,000 rupees. Third time, they said 30,000 rupees. Like that, he went to 1 lakh rupees. They still did not agree, they hit him and they took him in the police car. And then he said, I was offering 1 lakh for each one of you. They stopped and they allowed him to go. Winners keep on increasing, the leaders keep on increasing their stake in the game. They are very confident in their game. That's only one lesson, Mr. Mesh. I have many lessons to actually give. See, everything you can see from the perspective you would like to. There's any movie, any scene, any business, any stock, even from you, it's my outlook how I learn. So that's only one point. The lot of other points one can learn from any movie in fact.
I agree with you. Any movie we can learn many points. But anyways, we'll discuss it later.
Sure. So the last thing on the I would like to show you. So Stitch Fix comparison here. It's still a great company. The problem is they're unable to articulate the transition from the last chairman to the new CEO. The chairman is on the maternity leave. Company has no debt. It has got $400 million worth of cash. Company is absolutely, I should say it's a very highly undervalued right now. Don't know what will happen, but one thing I think we should not happen is price should not follow correctly. Because right now the technology companies price to sales VC and it is roughly 0.5. So if you are selling let's say $100 million worth of stuff, the company is valued at $50 million. And on the comparison and the data science, they are actually much ahead because they have 10 years of data. And Amazon is catching now. Same cloud comparison. Amazon is way ahead. Google might be cheaper because Amazon is the first mover. And we call it a first mover advantage. A lot of companies like Noon or Soup are coming on the horizon, but Amazon has a first mover advantage. Stitch Fix has a first mover advantage. Now, in one go, we'll cover all the companies for you, statistically. So look at you if you have, let's say, so you showed from 2021 to till date. Change the date. So what we're trying to show you here, the last slide, is if you would have kept this company from let's say last year 2021 till today, 5 or 6 companies you are losing money. Let's remove Huya, Stitch Fix, Charlottesville Holding because we have already covered for you. What we have not covered for you is Jilly, Deck is out from the portfolio, Interactive Broker, Skechers, and let's say Amazon. So you can remove those companies. Huya you can remove because it doesn't have a 10-year history on the listed space. Okay, you can remove Stitch Fix. You can put Cobalt. Should keep IB here. Cobalt is there, and remove Stitch Fix. And Charlotte is there. And DAC as well. Fine. So if you see, in Amazon, in the last 1 year, we lost $3,000 roughly. In Skechers, we made money. In a company called Agnico Eagle Mine, which now owns Kirkland Lake Gold Mine, highest allocation of the portfolio, has also not made you money. We did not buy that price. I'm just saying that 1 year picture is down. So you lost $30,000 for that matter. Oli, you lost roughly $45,000. Jilly, you lost roughly $40,000. Right? And I have not covered some of them. Now let's look at what would have happened if you would have owned them for the last 5 or 10 years. What I'm trying to say is the portfolio has a lot of cash, it has got gold mining, it is YTD up, and you have companies which are significantly beaten down. But if you're holding them for last, change the date. Sunday. Yeah. If you are holding those companies, except that the gold mining company, because we were not owning AEM, we were owning KM. If you look at Copart, Jilly, Amazon, Skechers, who have a 10-year listed space history, we would have been sitting at 20-25% CAGR. I hope the point is clear. Last point is that what game are you playing? I am not playing a short-term game. As I told you that I'm looking for the next 100 bagger for us. And I'm looking to make you 10 to 13 times, 10 times actually in the next 13 years, if not in 10 years. You need to look at this as a business. Then it will help you. I'm not your traditional fund manager. I want to be a business partner. We don't want to have thousands of clients. We don't want to become bigger. We want to become better. And there is a investment goal sheet in the end, which we are telling investors to find now and understand that what are they expecting from the investment. On that note, I'm open to questions. I hope the points are clear, and if you have any questions, we'd love to take it. We have enough time for networking as well. Do meet people. Please let me know if you have any questions. Right?
Charlottesville, right?
Yes.
So on, we're obviously talking about a new industry, which is cannabis, and most new industries in the last 5 years, take e-commerce as an example, or any space, online streaming, like you said, is a massive first mover advantage. In a new place, why are we still sticking with Charlottesville? The macros headwinds are good. Why not pick a market leader out of US or Canada?
So we discussed it generally. We had an earning call with them. Today, if I will sell this company, I just book your loss. It's already there.
Yeah.
So 2% is not going to really make any difference in my life. I have 25% lying there to allocate. So we totally agree with you that there are better companies out there. But what's the point when we know that it is oversold? We can actually get 3-4 times and then we can exit.
That idea, I don't mean to sell out of Charlottesville. I'm saying that if you want to capitalize on the cannabis trade, then why not pick another one?
Yeah. So that's a very good point. But today we are getting great companies at a throwaway price. So let's show that.
Are you saying that the cannabis companies are overvalued?
No, they're not overvalued. But the point is they don't have a history.
Okay.
So we have a history of a company where if you just sit on it, you're going to make a lot of money. So we've become more intelligent, more diligent in our process. We've been reading more. So now today we at least have 5 companies. It's very difficult to get those companies in the portfolio. We have companies, just sit on them and relax. You have to just see them every quarter. So very strong companies with a history of 20-30 years, growing at 25-30%. These kind of companies have come at a very, very attractive price where they have not made money for last 1 year. So these are the companies we would like to buy and focus on those right now. And there are also one bit that we are also using some software in our office, and we have one more theory that buy a company which you are consuming. So just to give an example, I'm not saying it's a recommendation for me. Please, one more thing, please don't try this one stock or two stock thing at home. Stock investing is very dynamic. Just because Zomato has fallen doesn't mean you should buy more. I am not recommending to buy individual stocks. I think Amrit put it very well. It's not halwa. So one stock, two stock, please don't buy. What Peter Lynch said, which I think there in the annual letter, is that know what you own. And that's why more stocks are actually more risk. Less stock is less risk. Because you know them with a great certainty. If I would have been, it's my own portfolio, I would have owned 3 or 4 companies. Yeah.
Okay. On the topic of companies being fairly valued, what about the Chinese?
You already bought. We are already suffering.
Oh yeah.
Yeah. And we are
What about the others?
Zillion also 20%. You can't ignore the possibility of happening anything between China and US.
Yeah.
So stick to the. So that's why we have nothing in Russia. So when the Russia war happened, we don't want to really go there. See, when we choose a company, nobody is with us.
Yeah.
Even you called us. So he called me, just to tell you, he called me after the market went down and said, "Kya lag raha? Bech do yaar, क्यों रखे हो?" And then next week things really turned. So I've seen crises. I have survived crashes in March. I've survived crashes in in 2009 and 8. And I've really seen that when the red happens in front of you, you sell it. One more question I think I need to ask you. Why do you think the stock market falls like crazy? What is the reason?
Margin calls. Margin calls.
Okay, but what triggers margin call?
Panic.
Panic. Sir, are you saying that you don't have panic in the business? You don't have panic in the property market? What is the reason that a lot of people say, boss, so I have person we have not onboarded him for last 2 years. He's telling me, I'll give you $1 million, but the day my million become 999, we are friends. I said, no, you have not understood. I am not going to take your money. What I'm asking you is that, why do you think the stock market falls crazy?
Just a liquid.
Liquidity. The answer is liquidity. Tomorrow, let's say you are all millionaires sitting here, and let's say I want to buy Bikaner wala, and Bikaner wala is saying that, okay, you can buy my business, but you have to give me 500 crores. And you guys have a lot of properties. Can you get 500 crores next day? Only place you can get from bank, or you can get from the stock market. So Uday Kotak, he wanted to buy something, he sold roughly 4,000 crore worth of share in a day. Jeff Bezos sold some share last year, and Elon Musk, I'm sure you know, Elon Musk sold something around $10 billion worth of share in 5 or 6 days. Liquidity is the biggest reason why market tanks up or down, and they also go down up very fast. So if you are very fearful, please switch off the screen, don't sleep. Because when we come to the stock market, we think by looking at it, it will go up. It will not happen. And property, 5 years plan. I'm going to pay. I'm not going to ask any questions. Now it's mine. That outlook is what we have to change. Because the stocks are there to make money. By the way, we have made money in business, right? And we are selling the goods of the big companies. Whether it is a retail outlet, we are selling their Kevin Klein or something, their product. Whether it's a restaurant, we are selling the branded stuff from the big companies. At any point of time, let's say it's an education business, we are using Zoom and Microsoft Teams, or we are actually using the software of these companies or the product or service of this company. Today, the alcohol is also from a listed company. Now, when you're okay to drink that alcohol or let's say eat that food from that company or Aquafina is on the table, what is the problem in buying that company if it is great and take people like us along who might take 1 or 5% from you depending on how much you give you? So anyway, the talk is over. Any questions so far?
Are you looking at Berkshire?
No, I'm not looking at Berkshire.
No? A lot of cash now, though, right?
So I'm not discussing the portfolio company, but we have shortlisted quite a few. And we don't know which one to buy because research is going on and it takes time. It's not, we don't buy stocks overnight. They might click us, but we don't believe in one night stand. It actually takes some time. We like to know the family well, and then we want to marry the stock. But one more thing, we don't get attached to the stock. We don't love or hate. The day we think that this is not happening, we sell it. Why we have not sold Stitch Fix is a very simple thing. No frauds. Company's got plenty of cash. Unique business model. All they have to is, and they are very honest. The reason the stock fell because they said we will not achieve 580 million next quarter, we'll achieve $530 million. So very, very prudent with the shareholder money. World's two largest or biggest VCs are invested in the company, and I've mentioned that in the annual letter. And these guys were responsible for Instagram and Uber IPOs. So, and one more company from Singapore is buying more stake in the company. Company themselves announced that we're going to buy more shares of our company. Yet they have not bought it. Even who has got a lot of cash, but they have not bought their own shares because the day rally was supply and demand. So I think we will talk once we'll have drinks and all. The bar is open and
Bhuvan, just one question, a layman question. You have 12 stocks. You are confident on all the stocks.
yes,
Stitch Fix, only you are still confident. You are going to keep them. You told us that you cannot change the allocation of the percentage, even though it falls, even though it increases. You will keep as it is. Why don't you sell off 2-3 stocks and increase the percentage of which are under value right now? So reduce, take the profit of the 3 stocks and average it out internally to the only Stitch Fix and another one.
good, very good question. Actually,
So, because if I try to tell you, giving you 100,000, put in 3 stocks, you don't agree with me. We had a long fight. So we ultimately did not happen. You do it for everybody, and everybody wants money on ROI. We can put ROI and good.
just now I
good
showed the
underlying.
ROI for this year 30%.
Sorry?
I have just discussed 5 companies and I showed you ROI is 30%. So the
But
reason
against that ROI 30%,
Huh.
you're losing 30% in other 5
No. That's said. This now said YTD we are positive. You have this company is already down. Now what will you lose?
Agreed, so buy out more.
Now let's go to the second point. Done? Should I answer? This has been our argument between Ashish and me that Amazon went down, let's put more money to that. And then what will happen eventually, he'll have a different portfolio. One investor called me and said, I will give you 250 more, and he actually gave me, and he said, but I don't want to buy these stocks. I want to buy stocks which are 40% down in the market. Think about it. If I have 2 ways of thinking, I'll again become a normal banker. It is better I should go to the bank and give you what you want. Because you want this, that person wants this, somebody wants structure loan, somebody wants leverage, somebody wants to buy a bank bond, right? The reason I am not doing so, because when I will do it for all. So just to answer you in one line, Stitch Fix and Oli is a hold, not buy.
At this level,
Once I will be very clear and very confident, I will buy more. And when I'll buy more, I'll buy for everybody. I have no 2 school of thought. The only plan I have is plan A. Plan B is not there. Because if a company is at $10, like Huya, right? $10, what happened? $5. So if my wife would have come to me and said, I'll tell you which company I should buy and I'll make a lot of money. So $10 company she would have bought, and $5 every night I would have been like, you are a bad stock picker. So I would tell her as well, don't be greedy. So let's not be greedy. At least have 7-8 companies. Amazon, we are very clear. We can actually put 20%. But then comes the asset allocation. There are companies like Amazon. So 10% is what will go to Amazon. That's the very exceptionally we go 25% to one company. So Amazon today, standing in front of you, I'm very confident. Who I am not going to put more money. Who I am not going to put more money. So I think I answered your question. So any stock which is at 10 has fallen from 20 does not guarantee to go back to 20. It can go to 5 or 2 or 3 also and remain there for years. So what people do a mistake, they buy a company which is actually going down. So there is something called don't catch a falling knife. And there is one more saying, don't come in front of speeding bullet train, like Denos. The reverse actually. Now actually for you I should have never bought Denos. I should have bought only stocks which have fallen, and they would have kept more falling, and you would have not made money last year. So Denos I bought for you as a location that one company took care of. Have you all got the answer?
So you mean you should never average in buying?
You should, when you're very confident. Give me more money, I'll do it.
What do you mean more confident? Means you are,
So, sir,
you are confident, we are confident on you.
No, so I'm not saying that company is a whole, I said. You will not lose money. But will you make 10, 20 times? That clarity even companies don't have right now. So what Jeff Bezos said in 2020 letter is that if I tell you today that I will have Alexa after 10 years, I will launch Amazon Prime and I will be having AWS, I am lying. He himself did not know. So what happened when Stitch Fix launched this freestyle, which is basically now you can buy clothes from directly, earlier it was not allowed. It cannibalizes the Fix, and that's why they reduces their revenue to $520 million. They themselves were not aware. And that's why I'm saying it is part science, part art. And I'm showing it to you that one piece of good has come from Stitch Fix and it has got stained. And I'm not trying to sell you anything, but the day I'm very confident, I'm going to buy. Now, like he said, why not more China? 20% is enough. I can't even go to China right now. The kind of restrictions, I don't know how many of you have gone to China in the last 3 months. It's completely closed. So 20% is a safer bet. In fact, it is a more good allocation. Right? Any further questions? You can take them when we talk and have drinks. Thank you for coming. It was a great chatting with you. And have a good day.